You all stand for the pledge, please.
I
Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Madam Clerk, please call the roll.
Joy Sellers.
Here.
Nikki Bender.
Here.
Kathy Altenseed. Here. Patrick Sellers.
Here.
Nikki Martin is absent.
Yeah. The first order of business is the approval of the minutes of the July 5th, 2016 Town Board regular meeting. I need a motion and a second, please.
So moved. And this says June on here.
I changed it. The ones I gave you should say July. I changed it on mine.
Okay. Yeah, mine says July.
Second by Sellers.
Yes. Please take a look at the minutes, please. What does that say?
Is that in your office?
Ain't this something? We didn't see it, too.
Because it's smarter than the phone.
Nikki,
Yeah.
we're gonna have to actually know it.
I mean, wow.
Okay.
All right, we're good.
All right.
Supervisor Sellers?
Yes, ma'am.
The only thing I noted is on number 3, trustee Altsey was absent.
Okay.
I think
It says absent.
Yeah,
It says it was absent.
So now I must not have a new one.
Oh.
That's
yeah,
okay.
that's, I
right.
changed that this morning, so.
Got it. All right. And then under assessor's report, does it say graft or draft? It still says graft.
Is it
Assessor
supposed-
presented a draft.
Yeah,
Oh,
it says grant.
thank
not a
you.
draft. That's okay.
We'll fix that.
All right, thanks.
I sent this to you, Cindy. You didn't send it back.
I've been busy working.
Any more changes to the minutes? All in favor? Aye. Any opposed? All righty. The next order of business is the presentation of the audit report. Do we motion in a second on all this stuff?
I don't believe so. It's just a presentation.
Okay.
I think, I don't know that we
Okay.
can approve it to put it on file,
Okay.
you know.
All right. Well, I give the floor to the auditors.
You want us to stay in?
Sure, that
Right
would
here
be
in front
great.
of the camera.
Yeah, right in front of the
Right over
camera.
there.
Sorry.
Your nose
Right.
against that
Yep.
one.
There you go.
All right.
All right. Excellent. I love doing these presentations, especially on camera. So. Thank you for having us here tonight. My name is Jenny Blocker. I am a partner with Benning Group, and I have with me Kyle Demas, who was the auditor in charge of the audit this year. We're going to give you a brief presentation on the audit report. You all have a copy in front of you, a hard copy, and a PDF has been distributed as well. It's a quite lengthy report, so I'm just going to hit the highlights because I know that you have quite a few other things on your agenda tonight, so we're going to try to make this as expedient as possible for you. Just going into the audit report itself, I'm going to start with that bound copy that you have in front of you. And I'm going to start on page 4. Which once you get past all of the table of contents and everything, seems like it's about 10 pages into it. Just on this page, this is a summarized view of the balance sheet of the township and where things stand at the end of the year. And just wanted to highlight for you, we only give a one-year presentation here, but just if you were going back and making any notes as far as this year compared to last year, the biggest change that you would find on this particular form would be the matter of the assets. You have the heading of the non-current assets there. That is actually down quite a bit from last year, but the main reason for that is because that building was sold during the year, and so that building was removed from this balance sheet. And likewise, if you flip over to the very next page then, it's called the Statement of Activities, Modified Cash Basis. I apologize, you're going to have to turn your books a little bit to the side there.
And that door might be opening, so I don't want you to get hit
so.
back.
Yeah.
Thank you.
Somebody get back there.
I see, you wanted us to stand up here so you can take us out. I got it. What I wanted to highlight here in relation to that sale of the building, On the, it's about a third of the way down at the bottom of the page there under special items. It's a loss on the sale of the building. And how we calculate that is based off of what you originally purchased the building for, your share, less any depreciation that was taken on the building through the period of time that you owned it, which only was about $12,000 or so, if I remember correctly. And then we take that and apply the sales proceeds to it. And of course, you were a little upside down on that building, so you had a loss of about $96,000 on that building.
A little?
A little. But I would like to point out, you know, as hard as that number is to take, it's something that I think has been expected due to the lawsuits that have been going on for the last couple of years. You knew that you were going to have to get rid of it. But I did want to at least point out the silver lining here is if you look just below that to the change in net position, what that's saying is that even though you had a loss on the sale of the building, you still showed that you were in the black by $27,000 even after applying that loss. So that was a way to reflect positively on how the township's operations actually functioned during the year. Now again, this is a very summarized picture. We actually, because you're a governmental unit, we have to slice and dice your numbers several different ways according to your funds, but that was an overall picture of the entire township altogether. The next couple of pages for you on what's more of the cash basis of accounting. So you're not going to see that sale of the building presented as a loss here in these particular financial statements. When you had originally purchased the building, that would have been a capital outlay at that point in time. So it would have been a large expenditure in the year that you would have purchased the building. This year, when you sold the building, that's actually reflected on page 7 of your financial statements. This is a profit and loss by fund on the cash basis, and you can see where that the sales proceeds actually come in there. Again, it's a special item. It's presented after everything else towards the bottom of about $125,000. So if you look just above that line item, that's where you actually ended up by fund on the cash basis before having to recognize those proceeds from the sale of the building. So just about every fund was actually in the black, and the general fund was the only fund that operated slightly negative, and that was only $3,500 worth. So again, we wanted to just highlight that and state that even though you had to eat that loss on the building this year, things relatively were in good shape this year. Any questions so far on that? Again, I know these financial statements are quite lengthy. Following these financial statements by fund, you'll see several pages of footnotes that go on to describe things in a lot more detail. I'm not going to spend the time to bore you with all of those details right now. If you have trouble sleeping at night, feel free to keep this by your bed. Read a few pages. You'll have no trouble falling asleep at all. I did want to just highlight a couple of things as we're going through here. On page 17, we have to report your cash position at the end of the year. And there was a small piece of your cash position that was actually considered to be uncollateralized by the bank.
Just Mike.
And all that means is that your balances at the end of the year exceeded what you were allowed in the FDIC coverage and also exceeded the additional collateralization that the bank will pledge to you as a municipal depositor. This was only due to a mistake on the bank's part in how they were classifying your bank accounts, which has since been fixed after the end of the year. Correct, Liz? Yes. Okay. So I just wanted to highlight that in case anybody had any question about that. Moving on then, a couple pages later on page 20. Now if you're really having insomnia, this is where I suggest you start. We've had to add a lot more verbiage this year to your reports based on some new governmental accounting standards that require us to give you a lot more information about your pension plans. And because you participate in IMRF, those are the pension plans that we have to elaborate on in a lot more detail. There's a lot of information in here as far as the types of plans that you are participating with, how your pension liability is calculated. These disclosures were pretty much written by actuaries, and as we in the accounting field like to say, actuaries are accountants with no personality. So you'll see that these disclosures get really dry as you're going through here. I hope there's no actuaries actually in the room. So again, there's a lot of additional disclosures here, which comes down to on page 23, again, just to hit the high points. Your net pension liability, if you were to stop operations as of today, no further earnings, and you had to pay out to IMRF in order to fund everybody's pension going forward, the balance of your net pension liability at the end of the year was about $396,000. So we don't actually record that in your financial statements because you report on what's called the modified cash basis of accounting. You're not a full accrual, so we don't have to recognize that in your financial statements, but just to make you aware that that's what's out there. But then again, those numbers can fluctuate widely because if you look just below that at the bottom of that same page, they are basing all of their projected liability calculations off of a 7.5% discount rate or rate of earnings. If that rate were to go even 1% higher or 1% lower, which it can't get a whole lot lower based on where interest rates are right now, but if you were to earn more interest, if rates go up, your pension liability would decrease to $131,000 at this same period of time. So a lot of these are, again, based on actuarial calculations. There's a lot of information in here as far as how those calculations are reached. It's quite dry, but if you do have any questions on that, please feel free to call us. Moving forward then, just a couple of other items. On page 27, we did want to point out that as a result of the sale of the building, you do have, within your general fund, you do have a split fund there where capital fund is incorporated within your general fund. And because the sale proceeds came into the capital fund, they were really intended to be used in the general fund because those are where the original purchase proceeds came out of. So we moved them back into the general fund for you. As far as other notes, on page 33, starting in this page, there are a couple of new financial statements. These again are, they are really related to those pension footnotes that we talked about earlier, some additional information. In case you didn't get enough information in the footnotes, there's some more detailed numbers back here that you can go through. And there's even, on page 35, there are some notes, again, with a lot of these actuarial assumptions as far as how they came up with the numbers. So again, I just wanted to highlight that those are different, those are new to you this year. If you have any questions on them after reviewing them, please feel free to contact us. And then finally, the last few pages that you'll see in your report here are some very detailed breakouts of all of the rest of your funds and how everything else performed during the year. Okay. As part of the audit that we go through, and I don't know, maybe I should pause here. Does anybody have any questions about the financial statements themselves? Okay. It's a lot to digest. I know that as accountants, we're always ready to talk about financial statements, but that's not everybody's cup of tea, so we'll move on. As part of the audit, one of the things that we do have to do is evaluate how the township functions as far as a procedural standpoint. And we did have the second letter for you. It has our letterhead on the front, so Kyle's going to go through that information with you.
As Jenny said earlier, my name's Kyle Demas. I was the auditor in charge on the job again this year. I worked with Liz and Patrick, and as a board, I know you guys know this, but they're great to work with. All the questions.
No, I didn't know.
Those are good days, Tom.
Well, I must have one good day. No, everything.
Will be late.
Everything from our perspective went great. Very smooth, much smoother than last year as far as journal entries, which I'll touch on in a little bit. But just kind of a preface there, everything went very well as far as the audit this year. So as Jenny noted, this letter here is our required communication to you as a board. It starts off, it says, we have audited the financial statements of the governmental activities, each major fund, and the aggregate remaining fund information of the township. That there is our responsibility. Our responsibility is to issue an opinion on your financial statements. So back in your bound report, as Jenny went through, pages, the first 3 pages the first 3 numbered pages. When you get to page 2, that is your opinion. That is what we are required to give you. Our opinion is unmodified, meaning that they're clean financial statements. So as far as that goes, that is our responsibility. The letter then goes a little bit further to elaborate on a few other things that we're responsible for as far as some of the supplemental schedules in the back. Your internal controls. We're required to examine internal controls on the basis of planning our audit, but not on giving an opinion on the internal controls themselves. There's a couple things at the end of this letter that we'll touch on as far as internal controls go for strengthening them, but we don't provide an opinion, so to speak, on those in particular. So if you turn to page 2, it just continues through some additional required information. The area under significant audit findings there, about 2/3 of the way down the page, difficulties encountered. Like I said, we had no difficulties. Everything went smooth, questions were answered, things were just fine from that perspective. There at the bottom, corrected and uncorrected misstatements. Any misstatements that we had found were corrected, were chosen to be corrected by Liz and Patrick as part of the audit. So there was nothing left unfixed, essentially, at the end of the year. There are certain levels that we look at as auditors that if it's below a certain threshold, we're not necessarily overly concerned about it from an audit perspective being misstated. But again, it comes down to management's decision, and they decided to correct everything that we had found. So if you flip over to the next page, it highlights a few of the material journal entries from our perspective. This list is much shorter than last year. We talked to Liz and we got a lot of things cleaned up. The things that were in here, some of them were just honest mistakes. We got, the first one was a matter of when real estate taxes come in, they get recorded in one account and then they're allocated out to the various funds. When that allocation was made, an incorrect account number was typed in, so the funds were in the wrong account. They were in the right funds, they were in the wrong account. So we did a journal entry to fix that. The next one down, as Jenny mentioned earlier, the sale proceeds from the building, those were originally recorded in the general and capital, so we did that transfer to show them how they are now. The next one down was, it was a discrepancy that we had found when we were rolling forward our fund balances from year to year. It was a matter of some things that changes in expense accounts over the years. It was simply a matter of getting those to roll forward in our system. That's what that was. The last two, $7,446, there was a new server that was placed in service. Those were some additional costs that we picked up that should have been capitalized with that. So those are just additional expenditures that we picked up from a maintenance supply account to capital outlay, mostly a classification thing. And then the last one was a matter of unemployment being posted in general and general assistance. You budget for that in the insurance fund, so we did a reclassification to move that to the insurance fund. Now some of these entries, we've talked with Liz and we've worked with Liz. She's going to be posting some of these things on a monthly basis, on an annual basis, so we should have very, very minimal, if any, journal entries going forward. But like I said, much, much better than what we posted last year. So very well improved from that perspective. Again, there's some more required communications there. I'm not going to cover everything on the bottom of page 3. If you skip over to page 4, this is where it gets into some of the internal control matters that I talked about earlier. Internal control, essentially from an audit perspective, the worst would be a material weakness. We didn't find any material weaknesses in your internal control. The next step down would be what they call a significant deficiency. So the second to last paragraph there at the bottom goes through a significant deficiency is a deficiency or combination of deficiencies in internal control that is less severe than a material weakness, yet important enough to merit attention by those charged with governance. So there was 2 items that we wanted to bring to your attention from an internal control standpoint. The first being at the bottom of the page, segregation of duties. This is kind of a standard comment that you've seen for years as far as Liz. Liz has capability to do a lot within the financial reporting function. I know we've instilled joy, I believe, with the financial statement, the bank statement reviews, things like that we suggested last year. Those are great controls to help mitigate some of that risk of Liz having control of so many different areas. But the board is reviewing financial statements periodically, you're reviewing the bills payable. Those kind of things all help mitigate that risk of segregation of duties. Again, kind of a standard comment for most all governmental units your size.
The only real way to get rid of that comment is if you were to hire additional people to take over some of Liz's responsibilities, and that's really not economically feasible. So it's not anything that we're overly concerned about, it's just because of how much Liz has access to, we really have to continue to report this to you, and it's kind of a acknowledge and move on. You do what you can with the additional help from the board, from Joy's perspective and from others, and then again, you move on.
The last one on page 5, financial reporting and material journal entries. Again, this was a repeat comment from last year. Again, with some of the material journal entries that we posted, we're all hoping that this one is non-existent next year. So that just simply goes back to those entries that we posted that we discussed before. Any questions on that aspect? If not, thank you all very much, and I've enjoyed working with Patrick and Liz, and hope we continue to work with you all in the future.
All right, thank you.
Thank you. Thank you. No. Thank you.
I would like to take this opportunity right now to thank Benning Group for your hard work and your dedication to the township. I'd like to thank this board for your hard work in getting us to where we are. I would like to thank the supervisor's office and the assessor's office for getting us to where we are. We have some more work we need to do, but we're doing a great job, and I'm very proud of all of you. Thank you guys very much.
Thank you. Have a good night.
You too.
All righty. The next order of business is the bills payable. Need a motion and a second, please.
So moved. Second.
Motion by Sellers, second by Bender. Please take a look at the bills payable as everyone is leaving.
Was it something we said?
You don't want to hear the rest of it.
No. Any questions on the bills payables, guys? I mean, trustees? Right.
No.
Okay. Okay, well, Madam Clerk, please call the roll.
Bender.
Aye.
Sellers.
Aye.
Aldrich. Aye. Sellers.
Aye.
Motion passed.
Okay, sorry about that. The next item on the agenda is the review and approval of agreement for computer services for the assessor's office. I need a motion and a second, please.
So moved.
Okay. Who was that? Aldrich? And seconded was Sellers?
I made a motion, she seconded it.
Yeah,
Oh, I'm sorry.
Bender made the motion.
I heard two at the same time.
Obviously, second.
Aldrich. Okay.
All right.
Thank you.
Let's take a look at the
This is the same as last year's, just in case anybody wants to know. It's just a repeat of what Mike had put into place for us last year.
Can I make one comment? Just because you may have read this in the papers, and I wanted to bring it up since we're doing the same thing. Winnebago County had a problem, they claimed, with their computer office. They had to pay a $254,000 fine
for Microsoft.
to Microsoft because they were downloading versions of the software they were not entitled to.
Yeah.
They had a contract with an independent contractor who was overseeing their employees and for a certain amount. But anyways, one of the things you read in the paper is the same thing in paragraph 31. I wanted to make sure everybody's aware of this since we got such a big public debate on it.
Okay.
And one copy of it.
Yeah. You know,
Oh, here we go. I'm sorry, I must have taken your copy.
Oh, yeah, Mike, you've got yours.
Waiver of incidental and consequential damages?
Right.
Okay.
Okay.
I gave him one too.
Neither the town nor Spigot shall assess any claim whatsoever against the other party for loss of anticipatory profits or any other indirect, special, incidental, or consequential damages incurred by the other party as a result of the provision of the computer services hereunder by the spigot.
That was the exact same term that was in the Winnebago County contract. And at the county board, at least some members, were debating it publicly and became, and I wanted to make sure you understood, that is a standard clause that is in many, many contracts, private sector and public sector. And basically, they're not getting paid a lot of money out of this contract. So they're trying to limit how much their exposure is. They don't want us to say, well, we had all these associated damages because something went wrong with your services. And to them, they can't say to us, you breached the contract and we suffered all these other damages. It's just basically just the direct damages that we suffer. If we have to go buy a new software or have somebody fix it, that's one thing. But indirect and, corollary ones are not going to be allowed to be recovered by either party. And just since it's been such a public furor over in Winnebago, I'm not sure if how many county board members or there are attorneys, if any. I just wanted to let you know, to be upfront with you, and that's something that they discussed, but that is a standard contract, and that term is also in this contract.
Okay. Are there any questions on the contract? Madam Clerk, please call the roll.
Pender?
Aye.
Sellers?
Aye.
Aldensee?
Aye.
Sellers?
Aye.
Motion passed.
Motion passed.
And just say this contract goes through the end of the board's term, which was April 30th, 2017, although technically the new board will get sworn in sometime.
May 20th. The next order of business is supervisor report. I have some handouts for you guys, the trustees. This is our tax disbursement, our second one.
Thank you, sir.
You're welcome. I'm going to hand out next is our expenditure to budget report.
What did we do to the building that we're at 100%? Where you see that?
Where are we at?
On the first page,
Maintenance supplies?
maintenance for the building, it
Maintenance.
says $3,000.
Where are we at here?
Line right here.
All
Maintenance building.
Isn't that the
2,000.
lawsuit?
Mm-hmm.
Is that our payout?
Mm-hmm.
Is that the lawsuit?
Mhm.
Oh, okay.
That is our payout.
So you still have about another 160,000, 155,000 coming.
Mm-hmm.
Oh, I'm sorry, I read that wrong.
Wait a minute, where are you at here?
I read that wrong. That's how total, how much
Right.
we've gotten in is that,
Mm-hmm.
that plus that.
Mm-hmm.
How much was,
This was our first disbursement. This
Mhm.
was our second, and that was our.
I was just looking at how
Total.
much you have left to come in. So, that's how much you're expecting of 951,
Mm-hmm.
and you got 365. You got 600,000. So, I'm sorry, I don't mean to confuse things.
You're all right, Mike. Are there any questions on the expenditure of the budget report? Any further discussion.
Just one, I just want, what's the job search? Is that what you spend out? It's on the last page.
Job
I know job
search.
training, transportation.
Right here.
Oh,
That's what the clients do.
that's what clients do. They have to do job searches, so.
Oh, okay, okay.
Yeah, so,
So where do they do those at? Is that like what you pay in
At the gas
the
station.
yeah,
gas
we help out,
cards?
with
All that
gas
comes
cards
out of
and all.
that? Okay.
Do you generally use all of the money for utilities? 25,000 on the second page,
Oh, yeah.
under GA home relief.
Home relief.
Because most of those people that you're paying their rent can get free gas and electric and that's that.
Yeah, we,
Community action is,
Yes, they did.
I mean.
Yeah, I don't think
They didn't
they,
have as much, but
Yeah.
yes, they had it.
But did they have it
Some of
for
our-
anybody besides elderly?
Right, some of our-
or disabled?
Yeah.
Okay.
some of our clients aren't eligible. They have, their bills aren't really out of whack, so they're not in danger of being turned off. So they come and they use part of their grant
The
for
grant for the utilities.
utilities, yeah.
Okay.
For NICOR and for ComEd. And,
Now, there's some that will just let their bill go
Yeah.
the whole year and then
Yeah.
won't go out.
Yeah.
over.
yeah.
Until it
And
has to be turned
and
back
we
on.
really, any more questions on things of the budget? All righty. The next order of business will be the assessor's report.
Nothing at this time.
Okay.
I don't think so.
What did it make you say?
Well, good. The next order of business, trustees report. Trustees, anyone?
Nothing.
The only thing I have to say is that,
She'd
Catholic,
have to.
Nikki. No, it's good
Yeah.
though. Nikki, it's good. I just wanted to say that, looking through the catalog, the perspective, is that the catalog? It was good to see Freeport in there.
Yeah.
And it was good to see that, hey, it's showing that we are doing something in our township.
Yeah.
And that's the kind of thing that makes me proud to be on the township board, of seeing that we're doing some positive things and that we're not just sitting here paying people to be on township, but we're also helping people to get skills and things.
That's right.
So that was a good feeling to see that in the book.
So, and I know I'm not a trustee, but I think what I really liked was the sub underneath the title, where it collaborates with other agencies for community programs, and I appreciate that. Something that I don't know when the last time that was done, but I mean truly collaborating with other entities to try to make things right. So it's nice to read. Good article.
Thank you. Thank you, thank you. Well, here we go. The next order of business.
Okay.
Executive session to discuss A, the appointment, employment, compensation, discipline, performance, or dismissal of specific employees of the public body as authorized by 5 ILCS 120/2C1, and B, the minutes of meetings lawfully closed under this act, whether for the purpose of approval, whether for the purpose of approval of the body of the minutes or semi-annual review of the minutes as mandated by Section 2.06 of the Illinois Open Meeting Act, as authorized by 5 ILCS 120/2C21. I need a motion and a second, please.
So moved.
Second.
I'll also need this motion to include the town assessor as well as the town attorney.
So moved.
Second.
All right.
I need to take the roll.
Yep, Madam Clerk, please call the roll.
Bender.
Aye.
Sellers.
Aye.
Aldense.
Aye.
Sellers.
Aye.
Motion passed.
Motion
We're in
passed.
executive session.
Now in
And the
executive
time
session.
is 6:03.
Okay, we are now out of executive session. There are motions made, no votes were taken in executive session.
I'd like to make a motion that we approve the minutes in the executive session.
Of the following dates,
Yep.
The following dates are February 17th, 2015, April 20th, 2015, August 3rd, 2015, August 17th, 2015, October 5th, 2015, October 19th, 2015, November 2nd, 2015, January 4th, 2016, March 7th, 2016, and March 21st, 2016.
Second.
Motion by Bender. Motion by Sellers, second by Bender.
Okay. Okay, should I call the roll?
Yes, Madam Clerk, please call the roll.
Aldensey. Aye. Bender.
Aye.
Sellers.
Aye.
Sellers.
Aye.
Motion passed.
Passes.
I make a motion that we, open,
Release these for
release
public
these
inspection
for
and
public
copy
inspection and copy.
Second.
for the same ones as I
For the
just read.
same- For the same minutes.
Sellers and Bender.
Yes.
Okay. Should I call the roll?
Yes, ma'am. Please call the roll.
Bender.
Aye.
Aldensey. Aye. Sellers.
Aye.
Sellers.
Aye.
Motion passed.
Motion passes. Okay. All righty. The next order of business is public comment.
Oh, we're
I'm
not
sorry.
done. We need to release all these other minutes.
We sure do.
No, we're not gonna do that now. We're only gonna do this many tonight. We'll do that on another
Okay.
meeting.
Okay, but those are all been approved. Those minutes have been approved.
Yeah, but
Okay,
it may have been
Whatever.
approved, but we'd have to go back in executive session, then I'd have to summarize all
okay.
of them again.
Again? But they've been approved.
They've been approved, but they're not gonna remember what was said on those dates.
Right.
That's 4 years. 3 years. Okay, all right, so the
We have
next
to do this twice a year.
Yeah.
If you have not released them for public inspection and copying, and you're maintaining them as confidential, twice a year, you have to go through all the executive session minutes that have not been released and decide whether they should be maintained as confidential or released for public inspection and copying.
Which we've done. We have done that twice a year. It's just that they're not
Good job.
approved for released. Okay.
Okay. The next order of business is public comment. No public here. Any other business coming before the town?
No.
Well, you can expect another executive session at the next meeting, y'all.
Okay, okay, y'all.
That's the business here coming before the town? Okay, well, I'll entertain a motion to adjourn
So moved.
until Monday,
Second.
August
See?
1st, 2016.
You never have to change that in here because it's always the same
Just trying to make it easy for you.
All in favor? Aye. Any opposed? Meeting adjourned.